You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick, Natural Resources Specialist at the Oxford Club. His website, investmentu.com. Welcome to the show, Sean.
Hi, thanks for having me on.
The equity markets showing some promise right now, but you say they have to hit a certain point to be really promising.
Well, yeah, in fact, I put this on my blog last week, is that the S&P 500 is near the top of the range that it's really been locked in for months now. And so it needs to move above that range or people will start to lose faith in the rally. We're kind of at a make or break point. That said, resolution of this could take a couple weeks. I mean, because I'm looking at like weekly charts, because the daily charts aren't really going to tell you anything. What with the Fed pushing everything around and everything now, so I think the next couple weeks could be kind of crucial. We'll really have to see what happens.
Janet Yellen was talking about gold. What does she know about gold anyway?
Well, she didn't actually speak about gold. She was kind of speaking about the global economy and how that makes the U.S. Fed take a wait-and-see attitude. And so any moves they'll make will be data-dependent. That's the phrase they love, which means that they're going to wait for signs of recovery and, importantly, signs of inflation before they start to really tighten things. She made a lot of very dovish comments. One is that the Fed could be more accommodative if it needs to be. Now, what that means is anyone's guess, but that's probably, doing another kind of like QE kind of thing, right? And she also talked about how low the Fed funds rate is when you figure in the rate of inflation that the Fed watches. And I don't want people to get into arguments over what the actual rate of inflation is. The one the Fed watches is currently at 1.68%, which is its highest in months, but it's still below the Fed's targeted inflation rate, right? So we had like 4 Fed governors last week talk about, we need to raise the interest rate in like April and all that stuff, and Janet just blew them out of the water. She spoke about the Fed funds rate, how it's actually really negative now because with the inflation rate at 1.68% and the Fed funds rate, I think it's at like 0.38, 0.35. It's a like negative 1.25 interest rate. And so when you look at that, what she's trying to say is we're trying to be as accommodative as possible until we see the signs of recovery that we want to see. I think what she's looking for is she wants to see good economic news out of China. She really needs to see things perk up there because the Chinese have been trying to stimulate their economy like crazy, and it's not really working right now. They have some more economic news coming out on Thursday, so everyone should watch that, and we'll see if they can actually breathe some life into that economy. If not, that's really going to put the halt on the U.S. Fed raising interest rates probably until the end of this year because we aren't seeing any inflation in like Europe. In fact, they have actual deflation now. Japan, it's been one sob story after another out of there. Despite all the stimulation that they're trying to do in Japan, nothing is working. So I think Ms. Yellen is looking at things around the world very closely now because she mentioned that in her speech saying, going to keep an eye on the global economy. We can be more accommodative. And she really didn't say anything hawkish at all. So all the Fed governors that were hawkish last week, they have been trumped by the chair. And so I think that we'll just see things kind of stay at this state for now. Very easy money. That caused gold to spark higher yesterday when she was done speaking. It closed up about $17, and then it fell again today, So that just shows, the loose money environment really makes things unstable. I think it's actually a good environment for gold because of negative interest rates around the world. We're seeing more and more of those all the time. but it could be quite the volatile ride. And so we could see moves up and down for no particular reason at all, other than big funds are taking positions one way or the other. They're always acting very short-term now, and so that can push things around and mystify investors who would rather rely on fundamentals when it's easy money that's really pushing things around.
Well, somebody made money last year. The Ontario Teachers Pension Fund made 13%, and it's the biggest pension fund in Canada. I wonder what they did, making that much of a return when other people are looking at negative numbers.
I am going to look into that because that is fascinating, because we're hearing down here in the States about one hedge fund after another blowing up because they aren't able to perform nearly as well as the S&P 500. So good for the Teachers Fund. Obviously, it's being very well run.
Yeah, they just wish the Ontario government could do that. It's running a debt that would make it the second poorest nation on earth if it wasn't part of Canada.
Well, yes and no. I mean, I think sometimes worries about the debt can be overstated as long as the economy keeps moving. And certainly the economy up in Canada was in recession for a little bit. I mean, everyone saw those stats. But with the price of oil coming back, I mean, things could start to improve for Canada again. Right now, oil and the Canadian dollar are at overhead resistance, right? And so if they both break out, because they seem to be going hand in hand, that could really improve things a lot. This movement in oil, I mean, we're seeing lots of people line up against it bearishly, saying, this really ran up without any real fundamentals to support it, and so they're turning kind of bearish. That sentiment is actually more bullish for the price of oil, because as long as everybody isn't bullish, then it can just climb that wall of worry. That said, we have seen prices climb enough that the DUC wells across the American shale fields, that is drilled, uncompleted, they had something like 6,000 of those. Well, they're starting to bring those online because the price is high enough that those drilled but uncompleted wells can now be completed and they can make money on them. So we should probably see a bump in U.S. production from that in the next couple months as those wells come online. And this is at a time when U.S. stockpiles are just huge. I mean, we have enormous stockpiles of oil right now. But the good news is we can export it now. And so that leaves more room in our markets, by the way, for oil from Canada. So we'll see things move around there. It'll be kind of an exciting time in the oil markets. Nobody knows what the Middle East is going to do. Now we have Russia and Saudi Arabia and some other countries talking about an oil production freeze. Iran's not going to go along with it. No one really knows what to think, but we'll have a lot of excitement there really to keep things, moving for a while.
And taking a look at the long-term future of crude oil, the International Energy Agency says there has been a historic low in crude oil investment, which could lead to a shortage in the future.
Well, yeah, I mean, historic low. I hate to read too much into that. I think we've seen the lows for the year, unless something weird happens like we nose over into a global recession, but the way things are going, things are chugging along, and we have seen some production cut back. They can bring new production on, but we will have depletion from those existing wells. So we've probably seen the lows for the year. We could maybe be range bound for a while, or else, I just spoke about how oil is up against overhead resistance. Maybe it can break out. Maybe there's things that could happen in the world, like we're already seeing production shortfalls from Iraq and Kazakhstan and Nigeria. So if more things go wrong in other parts of the world, then prices could really pick up.
We'll have more with Sean Brodrick right after the break.
Unbelievable harmony, spectacular performance, the ultimate tribute to the Everly Brothers and Simon & Garfunkel. Bird Dog and the Vintage Electric Band coming to Mission, White Rock, West Vancouver. Buy online and save at ontourtickets.com.
Welcome back. We're speaking with Sean Brodrick. Sean, copper had a tremendous run over the last month or two, going up to, I think, $2.28 a ton. Or is that a pound? That's a pound, isn't it?
That's a pound, yeah.
people have told me that copper's a good indicator of how the world's economy is doing. Is it a good indicator right now?
Well, it certainly used to be a great indicator, and that's because China was consuming so much of it. That's why they called copper Dr. Copper, because it took a temperature of the global economy. That said, I mean, I just saw a story cross the wires that China has incredible stockpiles, and so it's just telling people to cut it out and stop buying copper. Now, people will buy copper if they need it, but those stockpiles in China, at least according to the story, could weigh on global copper demand. I think that's why we've seen a couple days of weakness in the price of copper. If the Chinese economy is in transition, and that's what we hear they are trying to do, from being the world's backroom factory to becoming a consumer-oriented economy, then perhaps copper will not be the indicator that it once was, because more and more of what we buy is electronic, right? I mean, we buy apps that can now do things that we'd have to hire somebody to actually come out and do. And so there's a lot of things that are moving to the internet, to the cloud, and so perhaps copper won't be the great indicator that it is. But if you like the real world economy, and I do, I tend to favor that, then I'm still going to watch copper. And yeah, we've seen weakness starting last week, actually. But that said, you know, great run since the early part of this year, and the intermediate term trend in copper is still up despite this recent weakness. So I would look for a test of that uptrend, see what happens, and if copper can head higher from here, I think that'll be an indicator that maybe the global economy will start to shift into higher gear. But the jury is out on that until we actually see things happen there. Also in the price of oil, I mean, I would watch those two things. Price of oil, price of copper, those will be the two big indicators.
I wonder if there's a lot of demand for copper because the automotive business is still doing relatively well. And, you know, you have to wire up these vehicles.
Yeah, there's that. And in fact, I was just working with some people this morning going over Ford and GM. And, I mean, when you look at them, Ford especially, I mean, they just look like incredible values. But one thing about that is we had a long cycle where people weren't buying cars, and now they spent the last couple of years buying cars, right? So are we at the top of the car cycle? And so not that anything's really wrong, but there just has to be a cyclical shift lower as people work off the car loans they have and just keep driving the cars they have for a while. So that could happen. Where you really use copper is in new homes. I mean, there's just so much of it used there, and we have seen good home construction numbers in the U.S. Not great, but good. And so that is broadly, but there's still areas of like weakness. Just yesterday, there was some kind of crabapple on the local radio station down in like Miami, which is I'm in South Florida, so I hear these things. And just speaking about the condo market in Miami, starting to look weak and stuff like that. So I still think we could see weakness, but the general trend in housing seems to be up. And of course, it'll be helped by low interest rates, right? I mean, this just brings us back to Janet Yellen. If she's keeping rates low, one thing that will have a fire lit under it is the U.S. housing market, because those low rates means people can really buy homes, and so we can see things move along. And just a funny anecdote on that, you know that Switzerland moved to negative rates. That caused their housing stock to increase in price 25% in 1 year. That's like one of the unintended consequences that you get when you move to negative interest rates. I would really keep my eye on like interest rates if like I was an ordinary investor. Certainly I do it as as a professional, because so much depends on like interest rates. It can act like, rocket fuel for certain things, but people can come to depend on those low interest rates and just substitute that for other things in the economy that should be going on. So you definitely want to keep an eye on that.
Lloyds of London, kind of the bellwether, being the biggest insurance company in the world, they are having a hard time making any money for their investors because of low or negative interest rates in Europe.
Yes, and one thing that the U.S. is doing, by the way, is it's opening up the U.S. housing market and the U.S. real estate market, I should say, to investors from all over the world. This just started in December. There were some changes in laws, and so now those big European funds, which literally were getting no return on their money in, like, Europe, can now come over here and invest in our real estate and stuff. I think that will send at least high-end real estate up, and also the prices of, like, apartment buildings, shopping malls, that kind of stuff. Individual homes, I don't know, but, you know, I mean, certainly some of those funds will come here and speculate in, like, individual homes. So we could see home prices go higher. Now, that's good for speculators, not so much for the people who have to buy the homes. But that'll be one of the numbers that's probably talked about, because what the Fed would like is the Fed would love for home prices to rise because it wants inflation to rise, and it's not seeing that right now. So even if inflation was artificially boosted by foreign funds buying U.S. real estate and like stuff like that, that's the kind of thing that the Fed would look for so it could finally raise rates.
Well, Vancouver, when you said 25% increase in house prices in Switzerland, Vancouver's had the same kind of experience, and Chinese offshore money is getting the blame for the big hikes, although a lot of people dispute the statistics because they're not closely gathered in a way you can really correlate them. Well,
I just saw some stunning statistic on how much of Vancouver housing is actually bought by Chinese people, and I'm sure it must have been wrong, but it was something like
30%.
1 in 5. That's just that just seems really high to me.
Some say as high as 30%.
Really?
Yes.
Just bought by people from China. A funny thing is going on right now, and this brings us back to the world of international finance, and I don't want your listeners to go to sleep, but it affects them, which is that so many people from China are fleeing with the money that they've gained illicitly, you know, corrupt officials, you name it, that they're flooding into the U.S. and Canada, also Australia probably, because these are countries that China does not have extradition treaties with. So they show up with literal suitcases of money, right? What are they going to do with that money? Well, one thing is they will buy real estate, but also many of these people were professional grifters over in China, right? I mean, that's basically what they were doing. And that old phrase comes back, grifters got to grift. And so what they'll probably do is they'll probably run real estate scams, investment scams, stuff like that, because that's what they're really good at. In fact, we just had a big scam blow up here in Florida where some former Chinese official living here under some kind of assumed name had some kind of shopping mall deal go spectacularly wrong. You know, multi-millions of dollars disappeared and stuff. And he might be the first Chinese official on the run that's actually prosecuted by the U.S. The first one. You know, prosecutors have actually named him and stuff, but there's over 100 here. We know that because the Chinese have asked for them. And there's been nothing done to actually get those guys back. But the funny thing about this guy's, well, let's say alleged scam, because nothing's been proven yet, is that one of the biggest complaints came from another Chinese investor, a like self-made steel millionaire from like China, who said he put $150 million into this project, and you know, everything collapsed. Well, the amazing thing for anyone who watches this is that the Chinese government only allows people from China to take $50,000 a year worth of currency out of the country, right? And this guy put $150 million into a like real estate project in Florida. Now, sure, maybe he had some other fantastic money machine outside of China, or else maybe he had something else going on. But you have to wonder what kind of gray market thing he might have used to get his money out of the country. So it's like one Chinese guy is ripping off another Chinese guy. They're both in America because they're trying to avoid the long arm of like how that government restricts trade and like closes in on people. It's really a wild and interconnected world, and we could see this money from China. I mean, they had something like $1 trillion in like funds flow out of that country last year. I don't know what's going to happen this year, But, I mean, all that money has to go somewhere, and we could really see things pumped up by all that money sloshing around the Pacific and some of it ending up over here.
Well, I covered the extradition efforts of China for one man who they accused of illegally smuggling cigarettes, gold, silver, you name it. And finally, after 10 years of fighting extradition, Canada let him go with the promise that he wouldn't face execution, because everybody else accused in that case saw their families mailed a bill for 15 cents for the bullet that they put to the back of their head. And I asked him, really, what happened? And he says, I simply just bribed the wrong government officials.
Yes, right. Of course. But if you have a government built on corruption, that's not exactly the best basis for business. So I think China could still face a lot of problems going forward. And this is what, we keep coming back to Janet Yellen. This is one of the things that worries Janet Yellen. She knows the Chinese government is trying to stimulate its economy and help things recover there, but it doesn't seem to be working yet. That doesn't mean it can't work in the future, but so far it hasn't. And so that's why I believe Chair Yellen had to call the brakes, or else pull the brakes on all those calls that were being made that we hike interest rates. I don't think she thinks we can really afford to do that because of the unintended consequences. Things can ripple around the world, and it can affect what's going on financially in like other parts of the world, especially, say, foreign corporations, perhaps Chinese corporations, that have debt that is denominated in U.S. dollars. And if the U.S. dollar keeps getting more expensive, which is what was happening, those companies might go under. And then that could cause a crisis for the Chinese government, and you can see how this thing would snowball. So it's a big interconnected mess, and I actually think Yellen was quite right not to raise anything because we don't have inflation yet, and certainly employment could be a lot better. And so until we see those two things, I think she's right to hold the brakes. But I don't think she'll see those things until later this year. So I'm expecting, maybe we'll see one more rate hike maybe this year. Maybe we won't see one at all. We'll just have to see how that goes. But what does that tell you about gold, just to bring it back to gold? We are in probably one of the more easy money environments you will see in your lifetime. That is generally an environment in which gold is thought to go higher. So it might be pulling back today, but I think it could get quite more expensive toward the end of the year. And also, March is, historically speaking, the toughest month for gold. After this, things generally get easier. Things go higher for a whole bunch of reasons. So, that'll help push gold up too.
Sean, thanks a lot for chatting with us.
It's always great to talk to you. Thanks for having me on.
My guest has been Sean Brodrick, Natural Resource Specialist at the Oxford Club. His website, investmentu.com. You're listening to HowStreet.com radio. Find us on Twitter or Talk Digital Net. Our popular YouTube channel is Talk Digital Network. Comments or questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.